Good morning, it's Friday, November 1st, about 6 a.m. Central Time. New month, new beginning. Anxiety is on the rise as the election is just a couple days away. So overnight, looking at the precious metals, they are slightly stronger, attacking some of the highs of the overnight session. This comes after Thursday's liquidation across many different asset classes that was triggered by a sell-off in U.S. equities that broadened out and sparked profit taking in the precious metals markets, which later turned into stop-loss selling. Something you want to note here is when you look at the overnight session, you want to interpret it, and I've said this before, is based upon a 15-minute chart where you look at what transpired in the overnight session. So we had the furious sell-off yesterday. Seems like the sell-off had died down, and now we're starting to recover. So you want to look at what transpired. Are there any anomalies in the market? And are there any opportunities here? So if you watched the metals minute yesterday to the end, I did tell you that 33.26 was a critical level of support on the silver market. And if we break that level, you might want to look at some cheap insurance via put options. So that old support level will be the new level that we want to look at here today. So 33.26 will be a key pivot zone for the silver market. I anticipate a break above that level could spark additional buying in that market for traders that were washed out of the market. Now looking at the overnight price action, you do have December gold, 27.61. That's up about $11.80 here. 27.53 is to note as the low of the session. So that's back at that bull bear line here at 27.50. You look at the December silver market, 32.95. That's up 15 cents. Did trade on one side of $33 at one point in the overnight session here, and it hovers just right around that level. Something to note on the copper market, 435.90, that's up 180. That's been one of the more consistent markets with small green shoots to the upside over the past week and a half or so, consolidating around this level. Something to note here is that China had some manufacturing activity data, which was better than expected here and pushing back into a zone of expansion. So oftentimes when these markets get these little green shoots to the upside in anticipation of something, we do finally see that breakout to the upside. So we might want to look at start entering into that copper market, and we could easily define our risk based upon the tactical ranges that I outlined. Now looking at the platinum market, anchored at $1,000, and I told you that that would be a key level of support as it was a key level of resistance before. Same thing with the gold market, 27.50, that old resistance, new support. We noticed that the market went below it yesterday, but then was able to recover. So that's a bull bear line in that market. Now crude oil was one of the big standouts here, and I think it helped support the die down in the precious metals as they recovered once crude oil futures took back off to the upside. What happened? Geopolitical risk. Well, they are back. Also, OPEC is considering delaying that production increase in December. We did see a bullish EIA inventory report, and we have been bullish on the crude oil market since the mid-60s. So looking at some things here, we do have some economic data to watch here today. It's going to be a volatility packed event type day. So you got the non-farm payroll. They're expecting 106,000. Most of that is going to be from the hurricanes that we saw come through. The previous report was 254,000. If we get something like a much stronger number, it could move around the CME's Fed watch tool, as we've seen a bit of a die down here and a bit of a shuffle as far as the probability of an interest rate cut coming down to 93.1%. So we've got about a 7% chance that the Fed leaves rates unchanged. I still believe that they will most likely cut 25 basis points. We're also going to see the unemployment rate, 4.1% is what's expected. And then people are going to really focus on a couple things here. What are the geopolitical risks that are coming out as far as with Iran, with crude oil futures? So throw crude oil up on your charts here. If you all of a sudden see the rug pull on the U.S. equities, oil futures rise here, dollar index come up a bit, chances are there's a re-escalation of what's going on over in the Middle East. You don't need the news headline. You just need the price action to know what is coming out here. So at 7:30, I won't even have to look and see, did the employment data beat expectations? Did it come in below it? I could just look at the price action and tell you what had transpired with the release of the economic data here. So two questions that I'm really getting around a lot of people is how to trade the election. One, it is a few days away, so you're going to have two different trading sessions in order to volatility adjust your positions here. A second question I get from a lot of people is, what should I do with my current positions? Now, the key to successful trading here is to have emotional discipline and risk control. It sounds simple, but it's the main reason why traders fail. You want to have a core position, and that's a position that you can execute without triggering any kind of emotions whatsoever. I always say you want to have quiet confidence and self-control when you're trading, and it becomes essential to have a trading plan. I oftentimes get people that call up and they describe to me, hey, I'm long this, or hey, I've got this position on, what should I do? Well, realistically, one, I don't have an inside working knowledge as far as what your risk tolerance is, what the goals are of this, what this represents of a total portfolio, or things like that. Is this mad money? Is this a core position? Is this your only investment that you have? So it makes it very difficult. It's like me saying to you, hey, I want to redo my house. Well, I need a lot more information than that. What's your budget? How big is your family? What are your goals? What's the location of the place? What are your needs involved, and what do you like and what do you dislike here? So when it comes to trading, you really want to outline your levels, determine your risk, recognize most likely that you're not going to buy the low and sell the high, meaning it often takes time to add to positions incrementally. Something I do here is that I run a volatility adjusted model here. So I do a lot of the work for you as far as if you're working with us at Blue Line Futures. I'll identify any kind of trend changes that occur, like crude oil, for instance, had switched here from a bearish to a neutral trend today. So that's something to note because of the heightened volatility, the change in the direction. Also, if you look at the micro Dow, that went from a neutral to a bearish trend. However, it is recovering here today. So that tells you that most likely we will travel back into a neutral trend. Some of the other markets here, like the S&P 500 and the NASDAQ, they had switched to a neutral trend as well with yesterday's breakdown. However, the recovery that we see in the market tells you that the particular change in the signal here, the phase transition, may not be justified as a new particular trend, but oftentimes an overshoot in what we have. I also outlined volatility adjusted levels here, where it'll tell you that if the market flips to a bullish, you want to buy at this particular level. If it shifts to a neutral, you want to readjust your positions at these things. I also run a volatility adjusted position calculator, so it could tell me if somebody has a particular account size, how many positions that they might want to put on in a particular market. So that's a lot on my inside process that I've done here. And a lot of people question, how did you develop this? Well, it took 25 years to come up with these different models here, and there's a few that I had printed out. Now, looking at the gold market, critical level of support, 27.31. We close below that level here. It's going to go back to a neutral trend, but oftentimes what I'll do is I'll have an upward bias based on the previous trend that was in place. Same thing with the silver market, 32.26. Your critical level of support. We're going to want to monitor that, and we want to see what kind of recovery takes place in these markets. So if you got any questions, reach out to me, 312-858-7303. Remember, futures and option trading does involve risk of loss, and I'll be on CNBC at 1:30 Central Time here today covering the energy markets. Again, you got any questions, give us a call. Remember, futures option trading involves risk of loss. May not be suitable to all investors. Good luck, good trading.